Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Now, before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any rated item on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, euro-dollar. A higher, yet still indecisive spinning top yesterday, verging on being an indecisive doji cross. It was the fifth consecutive bullish white soldier, but many of them had been unimpressive. We ended up just over the broken bright red upper trend line, currently at 116.37. That's of the July to September base descending expanding wedge pattern. But the market was capped by the overhead mauve medium moving average, which is currently 116.65. Below we have the dark blue recently breached mid-September to mid-October descending wedge pattern. Both this pattern and the bright red descending expanding wedge pattern have been disappointing in trying any attempt higher, enough that I have retired the potential targets topside, if not the patterns themselves. A little below we have the November 2020 low at 116.02, and it very much seems as if the market cannot quite make up its mind on which way it wishes to go, and as a result has generally headed sideways. However, there is one other feature which I need to bring your attention to, and it's something that I've said now repeatedly since about March this year. We are set up with nearly 10 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025 either over 110.36 or under 103.53, then we'd be on. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year would be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. So far today, a reactionary move lower, back below the bright red upper trend line, but not by far, and seemingly unwilling to try lower and test the November 2020 low at 116.02, as it has since moved back up, if only just over the bright red upper trend line. Seems the market may be waiting for something. Cable, aka sterling against the US dollar. A very interesting combined immediate countering key reversal down and bearish engulfing pattern yesterday, if only just on the latter. Prices tried higher over the purple neckline, which is currently at 113.32, of the older mid-May to late July head and shoulders top, but were interestingly capped by, of all things, a short moving average, which is currently at 133.58, before dropping down not only through the purple neckline but also the bright red neckline, that's currently at 133 even, of the recent and somewhat complex early August to mid-October head and shoulders top, plus down through the congestion between 132.46 to 132.98, and finally stopping at the rising gold long moving average, which is currently 132.47. We ended up closing within the congestion, but by then the damage was done with a significant close below the head and shoulders top pattern, or patterns if you like. Additional to this, the action since mid-May today can also be seen as a quite large double top pattern with all the overhang overhead, and as I've said repeatedly, I quote, it would seem to be a reasonable force to tackle the supports, however much they may number, and that's the end of the quote. For all this action, I now feel obliged to lay out some potential targets below for the break below the head and shoulders pattern. Thus, a primary target X would be down in the 131.10 zone, with a harder to reach secondary target X1 down in the 128.97 zone. So what have we in the way to stop such declines? Well, the gold long moving average, not much then, well below the gold long moving average, not much then till the congestion between 131.18 to 131.44, and that contains the December 2020 low at 131.33 and the July 23 high at 131.44. Now this congestion is important as it stopped the decline from the previous head and shoulders top pattern back in August. So far today, a move down below the gold long moving average and into free territory, though not down as far as the next congestion, down between 131.14 to 131.44. I'll watch this market with great interest. US dollar against the Japanese yen. A bearish opening Black Mariposa yesterday and second bearish Black Crow. The previous session was an indecisive spinning top pattern, but it was also day 2 in a 2-day bearish meeting lines pattern, which explains the bearishness yesterday. Prices dropped down below the combined October 22 high at 151.94 and the November 23 high at 151.92, but stalled ahead of the old August 1990 high at 151.58, closing back up over the combined congestion in the 151.93 area. Now further overhead, we have the bright red upper bull channel line, which is currently at 153.32 for the overall pattern for this recent market move higher. And that is the April 2025 to date bright red bull channel, which is currently 147.35 to 153.32. We also seem to be setting up for a possible small October base double top pattern, but this hasn't quite completed as yet. So just keep a close eye on it, a close watch on it. In the bigger picture, we're also still within the important large, shallow, and longer term, early July 24 to mid-January 25 bearish shift pitch hawk, closer to the dark blue upper time, which is currently at 154.17. Now so far today, a test down to the August 1990 high, but then a reversion back up towards a lesser Fibonacci line at 152.52. US dollar against the CNH, the offshore Chinese yuan. A second bearish Black Crow yesterday and a follow-on to the previous session's bearish opening Black Mariposa and bearish engulfing pattern. Prices have ended up with their lowest low close, their lowest close since October last year. Overall, the market is below all the moving averages and had traveled until recently down along the attractor of the bright red extension to the lower trend line of the mid-January to late April 2025 descending triangle pattern, which is currently 7.12.21. Overhead, we have Fibonacci congestion between 714.48 to 714.95, plus the green short medium moving average currently at 713.36 and the medium moving average currently at 715.36, as well as the dark blue neckline currently 713.62 of the January to April 2022 reverse head and shoulders bottom. This last one had been good at capping prices after being broken on the downside back in late August. Meanwhile below, well, there's not much, but September's low was 708.45 until the congestion between 706.32 to 706.57. And that's made up from the 50% Fibonacci line of the October 22 to April 25 move and the June 23 low respectively. However, the market has until recently seemed shy of testing that far down. Now so far today, a small dip but then a small recovery, though not by far. US dollar against the Brazilian real. A second bearish Black Crow yesterday after the previous session's immediate countering bearish engulfing pattern and bearish opening Black Mariposa. The market was capped by the green short medium moving average, which is currently at 539.02, and pushed down and closed below the August and July 2024 lows, which are at 537.59 and 536.76 respectively. Further above is the 61.8% Fibonacci line of the October 19 to December 24 move at 541.57. Whilst below we have a small free area until we reach down to the 38.2% Fibonacci line of the July 19 to December 24 move at 532.15. Overall, in the bigger picture, the market continues lower within the bright red mid-December 24 to mid-April 25 bearish shift pitch hawk, sitting a little under the bright red middle time, which is currently 544.25. We have near to this time two other features, and that's the declining mauve medium moving average, currently 544.24, which has an astonishingly traveled locked in with the middle time since about June, and then also the dark blue neckline extension, currently 543.81, of the June to September 2024 head and shoulders continuation pattern, though I suspect this last one is less of an influence these days. Meanwhile, further below the market, we have the 38.2% Fibonacci line at 527 even, and that's for the October 2018 to December 24 move, and a 61.8% Fibonacci line at 524.07 of the April 22 to December 24 move, with a bright green May 2024 today uptrend, currently at 528.55. That's in between, and then after that, well, not much, bar the bright red lower time, currently at 518.34. And that's until the 50% Fibonacci line of the October 19 to December 24 move at 513.82. US dollar against the Mexican peso. An indecisive spinning top yesterday that could also be seen as a bullish thrusting pattern. The market, for the most part, has since about mid-September seemingly been held within a small dark blue bull channel, currently 1839.08 to 1873.20. The immediate resistance, which seems best effective on a closing basis, is made up from three parts. Firstly, a lesser Fibonacci line at 1850.81, then the February 2020 low at 1851.71, and finally the flatlining green short medium moving average, currently 1849.49. Now further overhead is a descending mauve medium moving average, currently 1861.48. Now recently we had seen prices test down to reach the primary target at 1831.80 for the move down from the earlier rectangle pattern. The secondary hard to reach target for this pattern has been retired, as I think this time is now truly up. And so far today, a small move higher, but the room for maneuver here in this market is becoming very restricted, and this might lead to a break, though maybe not just yet.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.